Hi everyone, I'm Stephen Adams. I'd like to welcome you to Wealthy Education's Complete Technical Analysis Trading Course. The information presented in this video and all subsequent videos in the course through Wealthy Education is for educational purposes only and is not intended as a recommendation to buy or sell any specific security. And with that, let's jump into the course. Our first module is on technical analysis fundamentals, and in this first video, we'll be talking about understanding technical analysis basics. Technical analysis focuses on price, volume, and chart patterns. In technical analysis, we'll use charts to examine the past history of a stock in order to predict the future movement of a stock price. Usually this is over a relatively short period of time. We'll talk about that further in the course. In contrast, fundamental analysis looks at a company's financial statements in order to assign a valuation to a stock. Fundamental analysis is focused on balance sheets, cash flow statements, and other financial statements. Fundamental analysis is focused on the valuation of a stock and whether an investor should buy at a specific price, and is usually focused on a longer term type of investment as opposed to trading. We're going to go over a few technical analysis terms so that we're all on the same page as we move through the course. The first term we're going to talk about is price action. And price action is the movement of a stock price over some range, usually in a defined period of time. Next, we'll talk about trending or ranging stocks or markets. A trending market or stock is moving up or down, so it's moving in a specific direction. And a ranging stock is a stock that is usually trading between two price points. It's moving up and down without an identifiable direction. A breakout occurs when a stock moves above a price resistance level, which we'll talk about later in the course, and it usually happens on heavy volume. So a breakout, if a stock is trading between $8 and $10, say for several months, and then the stock moves above $10 to trade at $10.25 and then $10.50, that's a breakout. Momentum trading refers to buying a rising stock or shorting a falling stock in a short time frame. So momentum traders are focused on stocks that are moving. They have to have a stock that has volume and is moving in a direction in order for their trade to work. Volatility measures the likelihood that a stock price will move dramatically over a short period of time. So a high volatility stock has a very high likelihood of moving a large amount in a short period of time. An example of this would be a biotech stock that comes out with news that their new drug has been approved by the FDA. Then that stock will become very volatile, usually move up rapidly. Usually low volatility stocks are something like utility companies. Usually large mega cap companies are less volatile than, say, small cap companies or micro caps. While we'll be talking about each of these terms in depth during the course, now I'd like to introduce you to the type of chart we'll be using throughout the course, and that's the candlestick chart. We'll be using TradingView.com for our charting software throughout the course, and the particular type of chart we'll be using is the candlestick chart. You can set the TradingView charts to candlestick by clicking in the upper left. Bar charts is the first option, and then we'll be using the first candle option. What I'd like to do is go over what a candlestick is so that we're on the same page when reading the candlestick charts. In this particular chart, the colors are red and green for the candlesticks. A green candlestick means that the stock opened at a certain price and then finished above that price on the day. And then a red candlestick means that the stock opened at a certain price and finished below that opening price on the day. And I've labeled this candlestick in the middle, the large red one, so that you can see what the four pieces of information a candlestick give you are. The candlestick gives you the open, the high, the low, and the close for the day. So in this particular candlestick, the high for the day is 107.90. It's indicated by the top of the candlestick here. And you can also read the number at the top of the chart here. The top of the solid portion of the candlestick is where the stock opened for the day. And the bottom of the solid part is where the stock closed for the day. The low is represented by the wick at the bottom of this candlestick. And again, you can look at all four of these numbers at the top of the chart when hovering over the candlestick. When we talked about price action earlier in the video, this daily candlestick gives us the price action for one day. And we'll be using these candlestick charts in various time frames to illustrate various concepts throughout the course. Now, I look forward to seeing you next time when we'll talk about uptrends, downtrends, and sideways or consolidating trends. See you there.